Hey, it's Soleil, and this is episode 555 of the Orange Pill Investor. And today I want to talk about the five properties of money that I originally saw Robert Breedlove come up with way back on one of his episodes. Can't even remember who it was with, but I was moved enough by it to snap this screenshot on my phone. It was, I don't know, it was at least a year ago or more. I turned on closed caption so I could get the list. And you could you could say that some more categories have been identified, or you could also put those new subcategories under these five probably. And so I asked Grok about it, of course, for convenience sake. And there's descriptions here. And what I thought I would go over is, in what ways does spam erode or degrade any of these properties? And the five core properties are going to be divisibility, durability, recognizability, portability, and scarcity. However, there are some subcategories. So there's also uniformity, and that you can put under recognizability. And in this sense, you want to make sure that there's no differences, right? So every unit is indistinguishable from another unit without loss of loss of value. Fungibility, he's saying, is a subset of recognizability, which means each unit is equivalent, interchangeable, no tainted units. Bitcoin achieves high fungibility on chain. Verifiability, this is also part of recognizability. And you have to be able to know whether it's real money or not. And then acceptability, and this one is kind of like, I guess it's an emergent quality of the others, and so it really doesn't come under any of them. But to the extent that any of these other attributes are degraded, it either is an acceptable money or it becomes a less acceptable money and starts to lose dominance to the one true money of the world. And so, what does spam do? Uh, Spam is going to attach arbitrary data to a transaction. And in this sense, it's, hey, what's up, Buffalo? And so, in this sense, it erodes a couple of these criteria, in that each unit is no longer equivalent or interchangeable. Because if somebody attaches, I don't know, an emoji or something to a transaction, a grainy, crappy picture of an emoji, like, probably no one's going to care. To a purist, that would actually be considered a tainted unit. And the NFT crowd is actually kind of doing the reverse. Like, oh no, it's not tainted. It's actually worth more. This is a special Satoshi. And this is a free market distortion, because it's the same problem that you have when a penny becomes rare. Maybe they minted, an error in the penny, or there's something special about it, and then 100 years from now, there's an Indian head penny, or maybe in the future, the all the quarters from the 50 states or something will be special. And when we add Canada and Greenland as the 51st or maybe 51st and 52nd states, the original set of 50 will be more valuable than other quarters or something. That turns money into a collectible, right? 100 pennies is supposed to get you a candy bar. It shouldn't be like, okay, one Satoshi has the Mona Lisa's picture on it, and now it's worth $100 million. That makes money, less like money. And any erosion or degradation of any of these qualities is is an attack on the money. Um, yeah, and so there's another important aspect here in that if CSAM ends up on the blockchain, the acceptability of the money is going to decrease drastically. It's one thing to say, okay, spam is on the blockchain. Um, and I could take a little tangent here and quote Jeff Booth. He likes to say that if Bitcoin remains decentralized and secure, then it wins. And so, really, that's a Bitcoiner's only basic requirement is we have to do everything we can to make sure that Bitcoin remains decentralized and secure, and we can worry about scalability on layer 2 and layer 3. And if spam increases the size of the nodes, that decreases the number of people on the planet that can run a node. So that's automatically an attack. Spam is automatically an attack on decentralization in that sense. But overall, if half or more of the world sees that Bitcoin is a distributed database for kiddie porn, then acceptability is going to go into the toilet. Now, does Bitcoin eventually recover from this? Like, probably, but why take this chance? With getting rid of spam, you you remove the or excuse me, you reduce your exposure to this existential threat to zero. And if you want to, so if you have no exposure to this existential threat, and then you're like, oh, should I make the exposure worse, right? Should I increase the op return to 100,000 uh, kilobytes? Is it bytes or kilobytes? From 40 or 80? You know, does increasing my exposure to this make any sense? And if you're going from 0 to anything, right? If you go from 0 to 1, that is an infinite increase. It's the same increase as if you went from 0 to a million, because the formula is the difference between the two numbers, and then you divide by the previous number. And if your previous number is 0, you're always going to be dividing by 0, which is infinity. So taking the risk that that Core did by blowing out the op return is extremely reckless, and I guess that's why I keep fucking talking about it. Uh, yeah, I think that's all I got to say about that. Let's just keep it moving. The song for today was Change, which 555 is the number of the episodes, and apparently that's an angel number centered around change. So if people like numerology, that's fun for you. Fun little factoid. I'm gonna have to keep ignoring these. I don't know what in the hell is up with my slow internet today, but every time I try to hit this refresh button, I just lose the whole damn thing. So I'm gonna keep ignoring those. Let's stop screen sharing. I don't really try to make predictions based on the chart, but we were complaining a little bit last night like, man, what the hell's up with Bitcoin? Why aren't we running? And of course, I always take that opportunity to blame Core. And I'm only half joking, but let's think about the network itself. So, if the price, the price of Bitcoin can just do whatever it wants, but is there a reason why it would be languishing? If Bitcoin is under attack, then it only makes sense that its price would be stifled until the network is convinced that the crisis is over. So, is Core 30 responsible for, the price not really taking off? Or is it just power law doing power law things? It is kind of interesting that stuff that comes up just seems to kind of fall nicely into what the power law was already going to tell people was going to happen to a certain extent. Like, if we didn't have the block size wars and FTX and all of these things that damage Bitcoin's credibility, like, would we be at 1 million right now? Who knows? But the silver lining is that BIP 110 is going to be available soon, I believe. And so I will be monitoring that. I'm pretty sure Matthew Kratter with Bitcoin University will be covering it. And as soon as I can get some guidance on when it's available to download, I will certainly make that announcement. I will be, incorporating it into my NOTS protocol as soon as possible. And the beauty of it is that it's going to start moving the filters from the mempool to the base layer. And there's two parts of this. There's the user activated soft fork, which as node runners we can implement it. Even if 100% of NOTS users upload it, it might not be enough. However, there's a secondary piece of the game theory here, in that the miners can also adopt it, and they can adopt it even earlier. It's set to kick in, I believe, no later than September for nodes. And but miners are incentivized to defect against Core, in the sense that if the network does implement this policy and the miner that defects last mines a block with Core, and the rest of the network has defected and started running NOTS with BIP 110, then they risk getting an orphaned block. So, the block rewards are still pretty substantial. And so it wouldn't surprise me if the miners actually defected ahead of September, so they could actually start mining according to the new filters early. And I think that would be a bullish signal to the market that this was a self-healing event, and that the attack from Core has been mounted, or a defense against that attack has been mounted, and we are in the process of healing. So there's too many coincidences kind of lining up too, right? Because with the American elections, they're going to want the market to pump ahead of November, and the BIP 110 is set to activate no later than September. So a nice 3 to 6 month pump right in that time frame seems like all of the separate coincidences might align, and maybe we actually get the Uptober this year that we were supposed to get last year. I don't really make price predictions, but if that happens, I think in hindsight, it will have been obvious, and that'll be the explanation. And probably everybody will just be thinking, okay, Bitcoin does what Bitcoin wants to do, but I kind of feel like this this is kind of a sickness or a disease that Bitcoin needs to heal from. And the beauty of it is that Bitcoin does allow us to route around bad actors and bad protocol. So I'm actually bullish. I think the FUD is real, but I think the defense is being mounted, and we'll get through this like everything else. Man, these pop-ups are annoying as shit. All right, cool. Let's check out. I don't think I'm going to be doing much because, yeah, Cypher's got a little bit to go here. Sold it for 116, still worth 95. And it's got another week to 10 days before I really start to feel super motivated that I need to roll this. Tesla, I would roll, but we're only 7 days from earnings, and I'll probably just close this and not roll it until after the market. Long-term debit spreads. Every time I collect premium on these short positions, I try to stack some leaps or some any kind of long leveraged exposure. And then with strategy, we also have earnings coming up here. So I'll continue to roll out the weeklies until February 5th, and then I'll close these along with the 45 DTE ones. These would be ready to roll before that, but I'll probably just leave these on for another, what is that, 14 days. I'll leave these on for another 2 weeks, and then I will take them off. All the cash secured puts are just watching and waiting for them to decay so that they can be closed or rolled out for a profit. Poorman's covered calls. I generally leave these covered calls on during earnings just because if the price does run up beyond my strike, I don't really mind. I'll just use that as an excuse to close the long call. So I will have some short exposure over earnings. All right, the IRA. This is not a margin account, so everything has to be secured with cash. So I can't play any little margin tricks with this account. My iron short call is actually, been getting wrecked, but it's coming back down to earth. It's almost, if it goes below or close enough to 48, I might end up being actually able to roll this. But I may end up actually having to close it for no other reason than I need money to close my short call position. And I need money to close this short call position. And I don't have any dry powder in the form of SATA or stretch like I do in my margin accounts. So that might be something I might want to think about doing, is just to keep $100 to $500 worth of a preferred in here to use to at least be able to afford to open and close some frickin' positions. To an extent though, iron is kind of serving as my dry powder because it's, it's worth about $5 grand, But 5 grand isn't enough to buy 100 shares of Tesla. It's not enough to buy 100 shares of Strategy. So it's something to, it's some way to use dry powder and still collect premium on it, like while waiting for this 5 grand to grow into 16 grand. And I think there's a lot more upside in selling covered calls on the miners than there is with the guaranteed 10 to what? 10 to 12% interest on the preferreds. It is a valuable dry powder tool, but in this particular account, I guess I don't really, it's not as useful because I'm not able to double dip. And what I mean by double dip is in the margin account, I'll have, if I sell a cash secured put, it's not really counting that against me. So it's not subtracting it from my buying power. And I can just use that buying power to double dip and buy a bunch of shares of a preferred and earned interest on it without dipping into margin use and actually getting charged interest. So that's kind of a weird, I don't know if it's a life hack or whatever, but it's possible. Seems like it's possible to do. So I've been doing it. Yeah. Again, earnings on the 28th. I'll take these off. Earnings on the 5th. I'll take these off. And I've basically decided to run the 2025 strategy back that didn't work in 2025, which is using the premiums to buy long calls and long leverage exposure. Those were almost universally losers in 2025, except for the Septembers. The September 1080s actually showed some profit in July when strategy, got close to its old all-time highs, but didn't quite give us the satisfaction we were looking for. So here's an example of what I was talking about with the margin. I've got 4 cash secured puts. If I was assigned at 16, that would be what, $6,400. I don't think this account has $6,400 in it. So technically this is using margin. But however they're calculating it, it still shows that I have buying power here. So I took that buying power and I bought a bunch of preferred, and it didn't count enough of that against me to even make it look like I was using margin, when I absolutely am trading with margin here, but I'm not paying margin interest, and I'm actually capturing some interest on SATA while I generate premiums and use those premiums to stack long positions in Tesla and strategy. Super bullish on SATA and Stretch not crashing after dividends. Well, sorry, Stretch paid a dividend, Bitcoin crashed, Strategy's price crashed, but Stretch remained high. And SATA also, even though they didn't pay their dividend, Strive's price crashed along with Bitcoin's price, but the preferred didn't really suffer. I guess it briefly dipped $1. No big deal. What did SATA do when Bitcoin tanked? So we were at 100, dropped to 99. Yeah, that is really nice. That is a really nice response. But again, the price of Cypher is dropping a little bit, so there's plenty of extrinsic value to collect. I won't be rolling this anytime soon, so nothing to do but sit and wait. The 5K account sold my weekly covered call at the 19 strike. What did I sell it for? Yeah, I sold it for $1. I probably can't remember if I even paid to roll this. It was probably close. What day is it? Wednesday. So half the trading week is gone and 70% of the options value is gone. Well, I guess if you count the weekends, it's pretty close to being about even. I could roll this down for a credit or just leave it the same. It's not. Let's see, I got the 19. Oh, I don't want to roll out. I just want to see what I can get. If I rolled down one strike, I could pick up an extra like 14 bucks, but I don't know, that just kind of seems like a waste of my time. And rolling down too far, I could double my premium, but I would be putting myself at risk if we pump right back to like 1850. Now I'm going to have to pay to roll. So I think just standing pat is fine. Rolling down for a small credit would also be reasonable. CLSK. Yes, this is not ready to roll. Sold it for 96, still worth 63. It's only been open for, well, it's been open for 16 days. So getting close. Oh man. I really thought Tesla was gonna hit all-time high, hit all-time highs and get into price discovery. And so I thought, okay, I'm bullish on the stock. Let me just put on some credit spreads. Pretty capital efficient, but not when the price of the stock just keeps tanking. So it'll be interesting to see if I can continue to roll this out or if I'm just gonna have to take my lumps. Let's see, expires in 2/21, so still 30 days left on this. I can drag my feet another 2 weeks before dealing with this. But if the price does go down and stay there, there's no fixing this really. It's just, you know, either you close it and take your lumps or you keep rolling, keep trying to roll until you're right. And a lot of people do that, but it's if it takes 6 months, 12 months for that to happen, and Tesla just keeps, going down and down and down, this $500 is no longer very capital efficient. It's just losing money to avoid losing money kind of situation. So we shall see. Cypher and Wolf, I copy traded with my brother-in-law. We just rolled. This will expire worthless in a couple of months. Been using some of the premiums to try to stack some long leverage. The long calls are still so cost prohibitive. I was like, all right, let me put a debit spread on here. Same thing with Tesla. Buying the 980s probably isn't too expensive, but stacking some debit spreads was a little bit easier to stomach on an account of this size. And then Strive is just so cheap. I thought, all right, let me put some speculative calls in here and see if the boys can pump my bags. All right, that is it. That's all she wrote. So appreciate everybody for